the economy is strong. I think it's still not fully accepted in some respects that the tax reform we had made every dollar profit in the United States 20 to 25% more profitable. I'm seeing roads being widened, buildings being built. So you need construction equipment to do that. You look at the energy sector, $80 oil, you punch a lot more holes in the ground, you do more things than that $50 oil. And I would expect that to continue, even though the comparisons are going to become more difficult or more challenging after a couple more quarters.
Sounds like they raised prices, and that was to offset higher raw material costs and input costs, which we're hearing from a lot of companies.
Yes, and that's fair. You have both material costs and also more in your smaller companies now, you're starting to see, or you're seeing rising labor costs. So, yeah, inflation is real. It is here, and it's going to be passed through, and they'll benefit from that to some extent.
Over 3 years, the stock is up 87%. Over 1 year, it's up 25%. However, year to date, it's not looking good. It's really suffered as a result of concerns about the trade war, the impact that they would face in sales in China, et cetera. How do you handicap that in, considering the numbers that you see here?
Great questions. So first of all, let's talk about the trade war and what the real cap is going to be on Caterpillar stock. In terms of trade war, and words do matter, you have the relationship with China and you have the one with Europe. They're not the same thing. China is our rival, period. From the time they entered the World Trade Organization, 6 million manufacturing jobs left the United States. You assume 5 to 7 supported jobs for each one of those. That's about 30 million jobs in the United States that went away, many of which were going to anyway, but many of which did not have to. With Europe, it's really a different thing. Germany's not our enemy or our rival. They are an ally. However, they underspend on defense by about $40 billion, and I think you have to look at the broader context. The real issue for Caterpillar stock is this. Last 3 years, about 25% of their free cash flow can be accounted for by underspending on capital relative to depreciation. If you normalize their capital spending and you normalize their cash flow, this should be about a $100 stock, not a $140 or $150 stock. And that will be the true barrier to making money on the long side in Caterpillar.
Wow, that's pretty negative.
How do you reconcile?
It's not their fault. Look, demand requires inventory. It requires receivables. It requires building on property, plant, and equipment. It's just the math. The stock went from, when we recommended 3 years ago, it's $60. It was like, just buy the darn thing. Everything stinks. It can't get worse. We got off close to 100, and frankly, it ran on us. And that we're in a market that does that.
We should tell her. You've had it rated to sell for a while.
We don't do we do formal ratings on certain companies. We don't formally rate Caterpillar, but we do tell clients what we think, what fair value is, and yes. I tend to be a stickler for valuation. Sometimes it works against me. At $100, we said goodbye, and Caterpillar didn't care.
How do you reconcile, though, that high watermark comment and what the company delivered today? Did they just simply misspeak? Did the market get it wrong? What happened?
Well, the market got it right. People and the consensus, you look at estimates, we're expecting them to beat numbers. Caterpillar's good at certain things. They're very good at making construction equipment. They've historically been very bad at forecasting demand. It's just not been their strong suit.
No, I get it. But when you say high watermark and then you beat and then you raise in the span of 3 months, what gives?
You see this dumb look on my face? I'm with you, okay? I can't explain it either. It doesn't make sense. The fundamentals are there. Why you would think it's a high water market. Here's the thing to consider. The tax reform wasn't passed till late last year, early this year. When you look at corporate planning cycles, they don't start thinking about building something somewhere else until about August or September. So there's been no real benefit yet in terms of incremental activity. As we go into corporate and strategic planning cycles in the late summer here into the fall, there's a benefit to come. And who knows if we get an infrastructure bill that actually would make some sense. So I can't understand why they would think it's a high water mark, and it hasn't made any sense.